Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight of corporate filings, especially when they try to hide bad news. Today we're diving deep into InMed Pharmaceuticals Inc. C's latest S1 filing, revealing a really interesting story about their fight for survival and their ambitious plans for the future. So get ready because InMed is trying to raise more money by selling shares, but they're also dealing with some pretty big challenges. Let's break down what's really going on behind the numbers and the risks. First up, InMed is a pharmaceutical company working on new drug treatments for diseases like Alzheimer's and a rare skin condition called epidermolysis bullosa. They also have a side business called Medica that sells rare cannabinoids for health and wellness products. It sounds like a lot of eggs in different baskets. Their main focus is on these drug candidates like ENM-901 for Alzheimer's. They've seen some positive preclinical data showing it might reduce inflammation and protect brain cells. This is a huge deal if it pans out, considering how devastating Alzheimer's is and how limited current treatments are. They're also developing NM089 for age-related macular degeneration, a common eye disease. The early results suggest it could protect eye cells, which is a critical need in this space. And then there's NM755 for epidermolysis bullosa, a skin condition causing severe blistering and wounds. They completed a phase 2 trial that showed some promise in reducing itch, but the results weren't exactly a home run when you look at the details. Now, let's talk money. The company has been losing money for a long time. They reported a net loss of $6.4 million for the 9 months ending March 2025. This is on top of previous year's losses. It really makes you wonder how they're going to keep the lights on. In fact, the auditors themselves are flagging a big problem here. They've stated that the company's ongoing losses and negative cash flow raise serious doubts about whether InMed can even keep operating. That's a serious red flag, folks. And looking at their cash as of March 2025, they had about $47 million. They expect this to last them only until the third quarter of 2025. This means they desperately need more money and fast. Adding to the pressure, InMed has been struggling to meet Nasdaq's minimum bid price requirement. They had to do a 20-to-1 reverse stock split just to try and stay listed. While they say they've regained compliance for now, staying listed is a constant battle. Being delisted would be a disaster for their stock price and their ability to raise money. The risk factors section is a mile long, and for good reason. Drug development is incredibly risky, expensive, and unpredictable. Many companies fail, and InMed is upfront about the high probability that their drug candidates could simply not work or be unsafe. They are also exposed to regulations around controlled substances, which can create controversy and restrict their development. To get the cash they need, they've entered into a deal with a significant shareholder, Savvy Volatility Warrant Master Fund, to sell them almost 4 million shares. This deal brought in about $5 million, but it also comes with some complex terms involving warrants and options. These warrants and options have limits on how much stock the shareholder can own at one time, which is pretty common to avoid flooding the market. Let's quickly glance at the financials for the year ending June 2024. Their total revenue was about $4.6 million, mainly from their Medica business. However, their operating expenses were a massive $9.3 million, leading to a net loss of $7.7 and their consolidated balance sheet as of June 30, 2024 shows total assets of about $11.8 million, but also total liabilities of $2.6 million. What really stands out is their accumulated deficit, which is a huge $109 million. This is the sum of all their past losses. It shows how much they've burned through money over the years. Looking at their executive compensation, the numbers seem reasonable for a company their size, with salaries ranging from around $260K to $300K for the named executives, plus bonuses and stock options. However, with all the risks and the going concern warning, you have to question if these compensation levels are sustainable or fair, given the company's precarious financial state. The auditor's report from Markham LLT is pretty stark. They explicitly mention that the company's recurring losses and negative cash flow raise substantial doubt about its ability to continue as a going concern. They didn't audit internal controls, but the warning about the financials themselves is clear as day. Now, my take on InMed, they are in a high risk, high reward industry. The science behind their drug candidates for Alzheimer's and AMD sounds promising on paper, addressing significant unmet needs. However, the financial reality is grim. They have a shrinking cash balance, a massive accumulated deficit, and they are burning through cash at an alarming rate. Their reliance on the selling shareholder and potentially shaky financing arrangements, like the one with YA2 PNLTD, highlight their urgent need for capital. The ongoing Nasdaq compliance issues add another layer of risk. While their BayMedica business provides some revenue, it's not enough to offset the enormous costs of drug development. They are essentially betting the future on these unproven drug candidates. The story here is one of high potential and equally high risk. They need a major breakthrough or a significant investment to survive and thrive. Alright, that's our breakdown of InMed Pharmaceuticals' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more community insights and ongoing discussions. Thanks for watching. See you next time.